Hello everyone, welcome to the Ichimoku.co daily market review for the trading day ending Thursday, July 3rd. Firstly to the S&P 500 and very strong bullish day today. The buyers coming back into this market very strongly, very solid upside momentum following a small body candle that suggested potential for a change of trend back to the downside. But the buyers have come into this market with very strong commitment, closing with control of this market. A very solid trading day today and a good answer to the very small white body candle of the previous day's trading. The day prior to that, the market opened up down around the Tenkan-sen, holding as support for this market, and we've seen the area around the Tenkan-sen holding a support for the past couple of weeks. If this market does come off, that's the first area that we should be looking at for continued support around the 1965 level. But we've had the buyers closing with strong control, establishing a new major high at 1985. Now this market is strongly bullish in all three timeframes, and the Chica span is well above the corresponding price action, confirming this bullish activity. The market is looking a little overextended in the longer term time frame, but no sign that we will see this market coming off yet. Just looking quickly at the Fibonacci Extension, we're examining the relationship of the current first time frame uptrend to the previous time the market's been trending up, and here we've seen the market almost trade to the 100% level. That's at 1987, so we should watch how the market reacts around that level if the trend does continue to the upside, and any loss of commitment by the buyers and a change of control here could herald potential for a change of trend in that first term time frame. If we see the market trading in a strongly bullish manner up above there, we could see the market testing to the 161.8% at 2013, but remembering that is above the round number 2000, and that will be an important level before the market trades to the 161.8% level. But looking at the Fibonacci retracement, we're in an expansive mode of that, and we've traded through the 161.8% level in a bullish manner, a very strongly bullish manner, suggesting that there is a good likelihood of the market testing to the 261.8%, which is at 2006, and once again above that 2000 level round number. Next, moving to gold futures, and here today with this current candle we've seen a continuation of the trend to the downside that was established for the previous day's trading, following this strong bullish candle that traded above the indecisive candles from the previous week or so, and finding resistance at the 1329 level. We had a doji type candle, and then followed by another doji spinning top type candle being rejected once again from the 1329 level and from above the Ichimoku cloud, and the market selling off with a much larger white body candle. The problem here for the sellers is that they lost commitment down below the Tenkan-sen, and the Tenkan-sen is held as strong support for gold futures for today's trading, and it will be an important level moving forward, and that's at the around the 1320 level. We've also seen the area within the cloud holding a support in this 1309 level, which has been tested on multiple occasions over the last couple of weeks, has held as strong support. Importantly too here, however, is that the 1329 level is held as resistance now for the fourth consecutive trading day. So not an ideal market to be trading. Solid support down below, but strong resistance overhead. Now the market did attempt to trade outside of the Ichimoku cloud once again today, and we've seen rejection from there. And the important thing here is that if we do see a bullish close above this 1329 level and outside of the Ichimoku cloud, we could see the buyers coming into the market if we see some decent follow through following any break. Now, not trying to preempt the market, we want to react to the market, how it trades, but if we do see that scenario occur, then we could see the market testing above 1350, especially if we see bullish activity up above the swing highs here at the 1335 level. Next, moving to NYMEX oil, and here today we've seen the sellers coming in quite strongly, and that follows two consecutive trading days where the market was finding support firstly roughly around a previous area that the market was rejected from in a minor way, but also around this swing high near the 104.50 level roughly. We also saw the Kijun-sen holding a support on those 2 days, but today the market has closed in a strongly bearish manner, or for the previous day's trading, sorry, the market closed in a strongly bearish manner down below each of those levels and below the Kijun-sen, suggesting that there was potential for the market to trade lower. Now today we have seen the market trade lower, continuing the series of lower highs and lower lows, but here we have potential for a change of trend with this candle giving us a potential hammer candlestick reversal pattern. And the key here is the large reduction in the size of the body of the candle. So for the previous day's trading, we had a very large black body candle, sellers in control, sellers finding solid downside momentum. For today's trading, we have a lot of that momentum reducing. We've also seen with the large shadow on the bottom, sellers being rejected from lower levels and the buyers taking control of the market. Now it's not strong control, it's moderate control, but that does set the market up for a potential change of trend in the first time frame, meaning we're looking for a higher high and a higher low. Now the problem here for the buyers is that if we do see that higher high and higher low, we may have this previous resistance at the swing high around the 104.50 level coming into play. And above there we may see resistance around the Kijun-sen coming into play, roughly about the 104.64-65 level. Any further downside could see support coming in down around the 103.39 level. But we do have a bullish market in the longer term time frame where the market's still trading above the cloud. But looking at the Chico span here, that's within the corresponding price action. So it's suggesting that that bullish activity that we're seeing in that longer term time frame may not be valid. We've also seen, importantly, a bearish breakout down below the Kijun-sen indicator, and it's been some time since we've seen a solid bearish close down below that Kijun-sen, and that is suggesting that there could have been a very strong change of sentiment in that medium-term time frame, and it suggests that there is potential for a change of trend, yes, based on this reduction in the downside momentum and the hammer type pattern, but we could just see the market retrace back towards one of these levels that I've described and then see the sellers come back into the market. So that's a potential scenario for this market. Now, based on the Fibonacci projection as well, we've seen the market test to the 161.8% level and beyond and be rejected from there, with the buyers taking control, and combined with the potential for a hammer type pattern, reversal pattern, it does suggest that there is a good likelihood of the market reversing the trend in the first time frame. So we are looking for confirmation of that with a higher high and a higher low. And also the Fibonacci retracement, it's in an expansive mode of that, and the market being rejected from the 161.8% as well. The confluence of the Fibonacci support down around these levels does suggest that we should be on the alert for a potential change of trend to the upside. Next, moving to wheat futures, and here we see the market changing the trend in the first time frame with the candle making a higher high and a higher low, but that's occurred on a very small body candle. So even though the trend has changed, the buyers have taken control, the amount of upside momentum that they built has been really not much of an increase on the previous, and it does suggest that the market could find resistance around the Tenkan-sen indicator around the 582 level. That will be very important potential resistance for this market. If we do trade up through there, we could see the market finding resistance around the 590 level, and then through there at the 600 round number level where the market's tested to on 2 previous occasions in the recent past. If we do see selling coming in, obvious support at 575, then down to the swing lows around the 587 level, and if we trade through there in a bearish manner, we could quickly end up trading down to about the 557 level. Actually, that swing low is not 587, it's 567, I'm sorry. Now, in terms of Ichimoku, we have a bearish market in all 3 time frames. But looking at the distance of the market trading away from the Ichimoku cloud, it is looking a little overextended. So it wouldn't surprise to see the market trade up through the Tenkan-sen and test, or attempt to test up to around the Kijun-sen indicator, which is trading around the 604 level. So that wouldn't surprise. Now we are having something of almost a head and shoulders pattern forming here, and this low here is at 567.75, and the low here is at 567.50. So technically not quite correct, because the low here is a bit lower than the previous. So the important thing here, however, is that we have congestion following this very strong first and second time frame downtrending price action down through the Ichimoku cloud. So there is potential for a breakout to the upside from this congestion area, but the market will need to break out up above the round number 1600, and it's debatable whether the buyers will have enough strength to actually do that. With this market congesting over the past week or two, we will be looking to the lower barrier here around the 567 level, and looking for a potential breakout down below there. But what we want to see is a strong bearish close down below there for the market to potentially trade to 557, and a strong bearish breakout down below there could see the market trading down to 526. Next, moving to the US 30-year bonds, and here we've seen the market testing down below the Ichimoku cloud and being rejected from there, with a very small black body candle, a very large shadow on the bottom. And this is something of a hammer type pattern. It's not a perfect pattern, however, because we have this shadow on the top, but the sentiment here is pretty much the same as if we did have a hammer type pattern, and it's all about initially the downtrend, which is very important, and then the large reduction in the downside momentum represented by the small body after a fairly large body during that downtrend. And it suggests that the downside momentum in net terms of from the sellers is drying up, and the price rejection here down below the 135 level and below the Ichimoku cloud suggests that the sellers have lost commitment, whereas they had fairly strong commitment for the previous day's trading. They've lost commitment. Now we will be watching the bottom of the cloud here moving forward. It is a very important level. It's around the 134.31 level, and if we do see that change of trend to the upside, then there is potential for resistance, and very strong resistance around the Tenkan-sen, which is at 135.27, then up to the Kijun-sen indicator and the 136 level, a confluence of resistance around that area. But we do have a bearish market in the medium and fast term timeframes by trading down below each of those indicators. We have had a change of sentiment in that short term time frame, once again back to the downside, supported by the Chicken span being below the corresponding price action, but at the moment a neutral market in big picture terms. But there is potential for this market to change that trending action in that longer term time frame if we see a bearish close down below the Ichimoku cloud. And what we want to see after that, if it does occur, is some decent follow through.